In a fast-moving market, you have to know what's working. With Nielsen's ad intel, you'll know the wheres, whens, and hows of advertising across industries and channels. Maximize your ROI and achieve better results. Stop guessing. Start winning. Nielsen Ad Intel. Hello, everyone, and welcome to the Banking and Payment Show, a behind-the-numbers podcast from EMARKETER, made possible by Nielsen. Today is September 16th, 2025. I'm Rob Rubin, Head of Business Development at EMARKETER and your host. Today, we're diving into a topic that has come up a lot in conversations in banking, payments, and retail: stablecoins. Whether you think of them as the future of money, a regulatory headache, or just the next buzzword in crypto, stablecoins are being talked about all over the place, particularly on Capitol Hill, in boardrooms, and across the payments industry. So to help break it all down, I'm joined by three eMarketer analysts, each bringing a different perspective. First, we have Tiffani Montez, Principal Banking Analyst. She's been following how financial institutions are grappling with the rise of digital assets. Grace Broadbent, who focuses in on payments, will help us unpack what stablecoins mean for networks, processors, and the rails that keep money moving. And finally, Suzy Davidkhanian, VP of Content, who covers retail and consumer behavior, will ground us in how, or if, everyday people might actually use stablecoins in their day-to-day lives. I'm going to tell everybody who's listening that normally we're all Zoomed together. And today, we're all sitting around the table together.
Secrets out.
So I'm really excited that we're actually looking at each other and getting to react to each other. So I'm really excited about it. And it's also the only time, I think, in 60 episodes-ish, I've had three guests at the same time. So let's keep it under control.
We'll try.
How you guys doing?
60 times to get this right in person, and 60 times for you to invite Suzy.
I'm so excited to be here.
I've been angling for a way to get you on.
Well, thank you for making it
happen.
happen.
And I didn't think, if you asked me 6 months ago if a topic like stablecoin could get Suzy on a podcast, I probably would have said no.
Well, Marcus in the Behind the Numbers does these predictions, and so I had a stablecoin one, which he thought was crazy, but now he knows it was not crazy.
You were not crazy. Well, let's jump into it. Stablecoins have been coming up a lot in conversations lately, so why don't we start with the big picture? Why now? What's driving all the buzz here?
It was really the election of Trump that really kind of started this new hype cycle, you can say. He courted the crypto industry overall aggressively during his election cycle. His own family has started their own crypto ventures. They've become heavily involved in the space. And within, I think, his first month in office, he signed an executive order promoting stablecoins to call for regulation to be developed around stablecoins and to just promote development of stablecoins overall. And from there, it's really taken off.
But it feels like a leap, right? We're going from something was like the Trump gold stablecoin, and even though it was a digital asset, it was felt like it was a collection piece. Stablecoins were things people would collect, like you would collect coins. It was like a new version of coin collecting. But now we're talking about payment rails.
Well, I think it's also, there's been a lot going on in the background that people just weren't talking about. Grace reminded me, I know B of A, for example, and others have probably been working in the background to build things and just not talking about it or waiting for the regulation to catch up to what they are seeing a need to be. And so now that need is there, I think we're starting to see significant movement. And I think at that point, we're going to see where novelty shakes out and where there becomes real need to solve problems with the technology.
Well, and on the retailer side, the difference is, we have to make the distinction between crypto and stablecoin, which is pegged to $1. So from a retailer perspective, it's easier to manage and handle that and make sure that they're, that they understand cash coming in and cash coming out, cash, in quotes, is equal, and that they can keep track of it in the same way versus a crypto coin where it's more like a market value that changes and is so volatile. So that's helped on the retailer side. I think the mainstream to fringe piece is still a little bit of a question mark because it's so much in the headlines, tagged to so many people that some folks might not trust as much, right? And so there is a trust gap potentially on the consumer side.
But it's tagged to the dollar, but it does increase or decrease in value.
Like currency does.
Yeah, but
it's the same.
But I guess, but
Yeah,
using a
it's not as
dollar, it's not as
volatile.
it's not as volatile, and it's not as obvious when you're buying goods whether the dollar is up or down. Like I don't go to the grocery store and determine which currency I'm going to use based on my principal.
But if it's pegged correctly, like to the US dollar, for example, you really should not notice a difference at all. Like as you said, we don't notice when the US dollar changes ever so slightly because of inflation or whatever.
Or
it
your
may
interest
be.
rate. It's not like you pay attention to your interest rate to decide where you're moving money in your bank.
And that's why like they are pegging them to the US dollar versus a stable coin can technically be pegged to any asset. It can be pegged to gold, it can be pegged to other currencies.
Okay.
It can be pegged to, any random object at all.
Monopoly money.
Yeah,
Yeah.
monopoly money.
Yay!
But that's why it's the US dollar, because it's trying to make it be truly like a digital version of the US dollar.
As stable as possible.
Yeah.
Yeah. And the thing is, like, NFTs from before, everybody was talking about NFTs, but that wasn't really pegged to any money, right? That was
Right.
like a fun, like kind of how you started off. It was like a fun thing to have a digital quote unquote asset that was more, like artwork. You never know what's going to happen. So this is completely different.
So when you buy a stable coin, do you get one coin for each dollar?
Yes. For most of them, yes.
And if you transfer them from one person to another, it still holds that value.
So then how much does stablecoin's future come down to regulation? Because if I'm giving a company my money and it's worth, I think it's something that I can use as currency, what protects me from them not holding my money?
It's kind of like a bank, right?
Right.
Yeah.
So
Yeah,
what's
it's
the
the same.
regulation? So if Amazon comes out with a stable coin, who makes sure that if Amazon
the
sells
issuer.
$1 billion worth of
Yeah.
stable coin, is
Yeah.
there a government regulatory body that says, Amazon, you have to keep a certain amount of that
Yeah.
available?
The experts will tell you about that piece, but on the retailer front, there are lots of loyalty apps where you load it with money. Like just think about Starbucks. You load it with money. The money just sits in their app. It's dollars. It's US dollars in America at least, and it just sits there. So
Yeah.
if they fold, or gift cards, right? You pay money to get a gift card, and so now they have an IOU. If the company folds, you lose the money. So I imagine stablecoin is something
Yeah,
similar.
and whoever issues the stable coin is who is the one that's guaranteeing that money.
Right.
So if you as a bank, for example, issue a stable coin, then you are responsible for that stable coin. If you're PayPal and you issue a stable coin, you as PayPal are responsible for that stable coin.
Right, but the bank issues the coin, but they also pay to an insurance fund, the FDIC. They all collectively do, so that if that bank fails, the government, that
to a certain
your
point.
money is protected up to a certain point. So my point is, if somebody like
If an
Well, that's-
Amazon issues their own currency, or Starbucks.
who's regulating that?
So I thought the Genius Act, right?
Yeah, so that's why they're making regulation right now, and that's why it can't be mainstream yet. And the Genius Act helped that, and there will be more regulation to come to make sure that if you buy a stable coin and it's pegged to the US dollar, there's actually something backing that in a bank. If you remember, like 2 years ago, there was a huge stable coin drama. It was, I think, called Terra. I need to double check that name, but the Terra became unpegged from the dollar because the company said they had all this backing, but they didn't. So it went under, caused a huge drama, caused a lot of people to lose money. But that's why regulation is now. So if a company issues the stable coin, they have to, the government regulatory bodies, make sure that there is actually proper backing to that.
Okay.
So that's what we're working on right now, is getting that regulatory piece in place to protect consumers.
And if a retailer is issuing it, I'm sure they have to show as many assets around whatever they're issuing, right? It's kind of like how vendors get paid. They have like a 30, 60, 90-day vendors, like clothing
Right.
vendors
Yeah.
or whatever goods vendors. I'm sure it'll be something similar to that.
Everybody feels so confident.
I mean, it was my prediction. It's what landed me here, so I'm going to
feel like
keep going.
It have to iterate, and it's gonna be some scary things because we haven't thought of everything.
Absolutely.
But I want
Yeah.
I want to talk about, like, because part of it is like, why do we need this? So I want to ask it in two different ways. First, I want to ask, why do we need this compared to the payments ecosystem that we currently have, the Rails, Visa, ACH, even real-time payments. Like those are all payment rails. Why do we need this one? And then what about consumers? Like maybe you're going to convince me why the industry needs it, but I'm wondering why the consumers need it.
Really big picture, stablecoins combine like the best aspects of digital currencies and traditional fiat currency. So on the fiat side, you ensure the stability, all the things. On the digital currency side, you get the real-time payment speed. You get the availability 24/7. You get the low cost. You get the end-to-end traceability. All the benefits of like a traditional cryptocurrency are combined within the stability of the dollar. And that's kind of the dream of the stablecoin.
All right. So I want to get to the consumer thing, but I'm dying to know, like, what is Visa and MasterCard? What are they going to do about that?
They're freaking out, probably.
Yep.
Well, they are trying to become part of it.
Yes.
Is really the answer, because they are probably freaking out and saying, if we don't develop our own stablecoin infrastructure and become part of it, then we're going to get left behind.
Honestly, they had a good run, right?
They still do.
They're doing well, but they've actually inserted themselves, to Grace's point, pretty quickly, and they're trying to put the technology in place so they're not pushed out of the ecosystem. Do I think they're going to get pushed out of the ecosystem? Absolutely not. But they're going to have to figure out, in a new world, where are they going to play and how are they going to make money. But to Grace's point, this is really all about cost and speed. Right. And that is actually, if you think about stablecoin under that context, it does solve real needs. It's just whether or not financial institutions, retailers, and everyone can figure out how do you use the technology to actually solve a problem, not just say something is sexy and we should all have stablecoin and therefore we should support it.
It's funny because like maybe Visa, MasterCard, the rails sort of
going off the rails right now.
Go off the rails. But it seems like maybe then the issuers get squeezed. Like the bank issuers that work with Visa and MasterCard and issue cards, are they going to issue stablecoin cards?
Well, I think that's what they're trying to figure out.
Yeah, that's what they're figuring out right now. It was reported in May, nothing's official yet, but it was reported in May that a consortium of the largest banks, so JP Morgan, Bank of America, Citi, Wells,
early warning, right?
Yes, are working with early warning services and the clearinghouse to develop a bank-backed stablecoin to all come together and develop one that can then be used within banks and transferred easily.
All right.
And I would also say that I've had a couple of conversations with credit unions who are also exploring issuing their own stablecoin.
Poor credit unions, right?
Yeah, but this goes back to the need. Like, what are you trying to solve by issuing a stablecoin to your member base? How big is your member base? What is the age group of your member base? And not your average age. We like to use this like average age of your... Actually, the real question is, how many of your consumers are over the age of 55 years old?
Right.
And if you tell me it's 60% or 70%, you
might
might want to think, like, you really should just be focusing on trying to get Gen Z. Stablecoin may or may not get you there. I don't know. Who knows? But so... what are you trying to solve? What are you trying to get people to do? You're trying to just get them to transfer money to each other? Because if you issue your own coin, can your coin be used to send to somebody else? If not, you're going to be stuck playing the P2P payment game.
Or are businesses going to make deals? Your coins are good with me, my coins are good with you.
Yeah.
Well, I think the platforms will do that, right? But if you start to buy into the Walmart or Starbucks coin, technically, at least in the immediate future, it'll just be usable there.
Yep. So that becomes a challenge, right? So we're going to have like 32 million coins.
Let's get this. So let's jump to why do consumers need this?
Well, I think it depends on, I know you mean the end consumer, but I'm going to start with the middle person consumer, which is the retailer, right? The retailer needs this because they're getting squeezed. There's so much money in transaction fees. So using a stable coin, assuming that they can convince people to buy their stable coins, right? So let's put that aside for now. if they are able to get that going, they're going to save money on the transaction fees. Right now, some of the mom and pop shops here show you, like, if you pay cash, it's $4. If you use your credit card, it's $4.25. I mean, that's a very clear indication for a consumer to understand the savings of not using their credit card. So there's that. But there's also a new cash revenue stream, right? Retailers are borrowing against their potential consumers by getting everybody to give them money. So they issue stablecoins. So now they have like money that's floating that they can use in a different way, right? So there are a lot of upsides for a retailer.
I totally get it for businesses. I'm just trying to understand, like, why would I want to give Amazon $500 of my money in advance?
So, I mean, you kind of do. You give them your membership fee, right? And if you give them your membership fee up front, the 100 and whatever it is, it's cheaper than if you do monthly. So we do these kind of like things of giving money up front.
If you think about it, people are spending hundreds, if not thousands of dollars a month at Amazon.
Right.
Yeah.
Even just in purchases, groceries.
I do think, like, we're being positive about this, but I do think consumers are going to take some convincing. Like, it makes a lot of sense to use stablecoins right now for like peer-to-peer payments, deposits, transfers, things like that. But on the retail side, they will need convincing. And like, whether it's Amazon, it's part of their loyalty program to use it and you get benefits that way, or other kind of discounts or rewards.
I would rather buy the stable coin at checkout. So I don't want to give you $1,000 of my money in advance, but when I buy something, I want the transaction to be, I buy it with my dollars, I make it stable coin, and then...
I don't think you would need it for that, right? Like, I think that takes away from the idea of loyalty. Let's use Starbucks, because Starbucks has an app that people load money in.
Yeah.
Well, I think it's at any minute now, because they had an NFT and it didn't work.
Is it called Starbucks?
Possibly.
It would be a missed opportunity if not.
Taco Bills?
Yeah.
Starcoin.
No, Starbucks.
Starbucks.
Yeah.
But what about the coin?
Sweet Green.
Okay, back to the consumer.
Helping them promote their new stable coin.
No, but I think it's ingenious, and Grace is 1,000% right. If you don't let the consumer understand why this is important to them to do it, it's not going to work. So it has to be a very seamless. There are lots of vendors that are trying to help with that, right? And the PayPals of the world that are working through it. So it has to be a seamless. At checkout, you have to give me value. Like, you have to show me that, okay, you're saving money, Starbucks, by not running credit cards. What value is that transferring for me? And then Starbucks is not the right example for this, but the returns are immediate. You buy a dress, you don't love it, you return it, you have to wait for the credit card to reimburse you. There's that moment in time, and for people that are paycheck to paycheck, that could be a reason to use a stable coin.
I don't want to take it too far, but Dunkin' Dough.
I did.
She's seeing your Dunkin' Donuts over here. We got coffee on the table.
Yeah. I got my Starbucks.
Who's going to go first?
Dunkin' Dough.
Dunkin' Dough or Starbucks?
I can't help.
Love it. You should have been in marketing.
You can contact Rob Rubin, Dunkin' Donuts and Starbucks, for help with your marketing.
For your naming convention.
Well, and I mean, it's all about a marketing play too for a retailer.
Well, what
right?
is the story?
Absolutely.
Like, what are they going to, what's the story for everyday, like, what is the story retailers are going to tell shoppers?
As you can tell from my cup on the table, I went to Starbucks this morning, and I automatically add $25 every time I go to the app. I don't think about it. It just forces me to. It says, oh, you don't have enough money on your card, reload $25. And they just capture you. I truly have never thought about it once in my life. I'm just like, yes, this is what you do at Starbucks. If you really
get better.
You get better points, and if it's like ingrained in the mobile app experience, I know I'm getting points. I'm not thinking about the $25 reload. So we're already doing it to some extent.
Yes.
Agreed.
It's just like we're moving, instead of it being your dollars being in a fictitious app sort of thing, it's like you've moved them through stablecoin. Yeah. Now, I don't understand how a consumer will decide, like, oh, I'm not putting my $25 in, I'm buying stablecoin. That piece I'm not as clear on.
What about stablecoin credit? Right? Like, a lot of people buy groceries with credit cards because they don't have enough money to pay for their groceries these days. So are they going to buy stablecoin credit? Like, so you're talking about you have enough money and disposable income to be able to not even think about putting $25 on Starbucks, but that's not everyone.
Yeah. I should probably think about it more, but
right,
yes.
but like, so it's going to give great benefit to people that have the disposable income to float money.
Yeah, because
what about the people who can't?
Right now, yeah, it is. There's no kind of credit alternative. It would really be a replacement to like a debit card at a retail store.
I don't know that the paycheck to paycheck folks are the ones that are thinking about crypto. Like, I think they have other things to worry about, and that grocery stores have high and low end consumers sort of, and so they will still be able to grab a market that makes sense for them. Grocery just might not be the right place. It has to be a retailer that you frequent enough so you don't feel like you're leaving money on the table forever.
Right.
And that if you think about, back to the marketing question, you have to talk about it in terms of the benefits to you, not the features, right? Nobody cares about you retailer are going to get more money back because you're not going to pay the transaction fees, or you're going to clear it faster. You have to tell the consumer you're going to get more rewards. You're going to get access to things that you wouldn't have otherwise.
Free shipping.
Yeah.
Or
whatever that next level of, use the QR code at the store so you can pay direct without having to go through some sort of process.
Prime for your whole family, not just you.
Correct. That might be. That's how they're maybe starting it up. That's how they're teeing you up.
No, I get it. I just want to sort of close it out with this question of, when we're all sitting here, and we will all be sitting here in a year from now, what's the headline about stablecoins and payments? Did it do anything? Do we have Starbucks and Dunkin' Dough?
I actually think that there will be some retailers that come out with it, but from a headline perspective, I think it'll be more around, it'll be part of a wallet series, right? And and we've talked about this so many different times in so many different ways. Stablecoin will be another component of the wallet, and agentic solution will come and tell you like, oh, at Amazon, you're better off paying with their Amazon stablecoin than your dollars. But at Starbucks, you're better off putting money into the system. Whatever it is, but I think it'll be an extra platform that will help. It'll be an AI
It's like an extension. There's technology now that helps banks determine what's the cheapest rail to process different things at.
Yep. And I think that's probably where the focus will be over the next year. It's like really, so I think right now people are still trying to understand the technology and what it will mean to issue your own stablecoin and what the opportunities are. I think people are going to start to internalize it over the next year. And next year, I think people will focus more on trying to solve real problems. And I think when I think about real problems, they're what Grace said earlier. It's speed and it's cost.
Right.
And so where can I gain the most speed and the most cost? And so I don't think we'll necessarily hear a lot about the customer-facing aspect, but we'll start to hear how it's used in the background to solve payment, we'll call it payment problems.
Yeah, I agree with that. And I think the biggest headline in a year from now will probably be that the largest banks are launching some sort of their own solution.
Right, they don't want to get
Venmo'd.
Venmo'd.
Yes.
I use Zelle.
Zelle
is bank owned. It's basically going to be a Zelle version. It's through the owners of Zelle are creating this. And I think that's the direction we're headed. I don't think a year from now every single person is going to be using stablecoins everywhere, but I think the development side, there will be a lot of improvement in the next year.
I really hope we're not using 32 million different types of stablecoins next year.
This is so confusing.
No, it's unrealistic.
Well, it's like how there are so many different loyalty points, right? Or like, and if you use the credit card on this, you might also get the Rakuten. And I think gamification is something that consumers are accustomed to, and this might just be part of that as well in some ways.
Agreed.
I think we should be figuring out how we can do more of these podcasts around a table together and not on Zoom.
I agree. Let's not wait to episode 100.
I want to thank everyone for listening to the Banking and Payment Show made possible by Nielsen. Also, thank you to our studio team that puts these episodes together. Our next episode is on October 14th, so be sure to check it out. See you then. Bye, everybody.
Bye.
Bye.
Bye.